And we are checking the closing price of oil. We saw oil tumbling to a 7-month low. This down on economic concerns or global macro concerns. Right now we're seeing it at 51 a barrel, down 4.89, roughly 5%. Oil prices, they're sinking on worries that demand will shrink because of that trade war escalating with China. Joining us now is Tim Bigham. He is the lead option strategist at Delta Derivatives. Tim, there's also the surprise glut.
Yeah, absolutely. And we're seeing, oil down for kind of the converse reason. We're seeing some of the commodity prices up here. So certainly that slowing growth, not only in the U.S., but I think especially worldwide. China with what they're doing, we see this, race to the base having a big effect on oil. We'll see if oil, breaks down even lower here. If it does, we might not find support until the upper 40s.
Is there an argument to be made here that some of the fears are overblown?
Yeah, absolutely. I think if you get something good coming out of China, you'll see this sell-off in oil being reversed and some of the big rally in the commodities being reversed as well. But until we get some positive news, I think you'll see this, head lower and, some of the other commodities and precious metals especially head higher here. So we need oil to get a bid here. If we do, we may see a couple days of short covering. But I think for the time being, oil, that rally that we saw up towards the 60 level, certainly any rallies to be sold in oil until further notice.
There's certainly concerns about the supply here in the U.S. There's also concerns about Iranian oil and whether China does, in fact, move ahead to buy that oil, retaliating against the U.S. sanctions against Iran. There was that note that came out from Bank of America Merrill Lynch that said crude oil could fall to $30 a barrel if China moves ahead with those purchases. Do you agree with that?
Yeah, I think 30 is kind of alarmist, but certainly, again, the mid-40s is really, if we break support around here, I think the mid-40s is the next stop. So I think oil, if that does come to fruition and China does go to Iran, certainly that will be a big negative, especially for U.S. crude.
Let's talk about some other commodities that we've seen moving higher. Gold notably breaching that $1,500 level for the first time in 6 years. Certainly a move that you can expect on the back of concerns and this being a safe haven asset. But how sustainable do you think that level is?
Yeah, that's really, I think, it's a breakout to the upside. I'm always a big proponent of usually there's a retest and see if it holds that 1,500 level. So I'm not, going to be an aggressive buyer here of certainly gold or silver for that matter. I think wait and see what happens. Although if it does hold here and if we see interest rates, especially in the U.S., heading lower, that 10 years approaching, 1.6 to 30-year almost at 2, I think this, constant currency devaluation around the world will give a bid under gold even further. So I think for the time being, caution is warranted, but I think gold longer term, probably a buyer on dips here going forward.
Goldman Sachs coming out and saying that gold could cross $1,600 or higher if trade tensions continue. It sounds like you don't expect it to reach that level.
Yeah, I mean, eventually I think it absolutely could. I just think for the time being, given the move we've seen in gold, saw in silver especially, and especially the move we've seen in interest rates so, much lower here. This has been, an unbelievable spike higher in U.S. Treasury. So I just think short-term things getting a little overdone here. I think longer term, though, certainly the backdrop, unless we get some easing here, is positive for gold and silver and probably a negative as far as U.S. interest rates heading lower.
Okay, Tim, appreciate your time today.